more information on the market movements, let's bring in Viv Govender from Rand Swiss. Viv, thank you so much for joining us. Let's start with the market movements of the day. The JSE All-Share Index ended the day more than 1% in the green, and many of the other indexes were also far in the green. What happened today?
Yes, we did see quite a nice recovery coming through in South Africa. The rand also strengthened quite nicely. We have, of course, the inflation number came out, as you said, a little better than expected. We are talking about 0.1% or so, but we are pretty much we're pretty close to that a target level of 4.5%, well within the range of 3 to 6%, which is obviously a positive. And we saw the the financial sector also looking reasonably good at that point in time. We also saw a reasonably good inflation number coming out of the UK as well. So maybe this is more than a South African trend that we are seeing in terms of inflation being slightly better than expected.
Let's have a look at company news now. Southern Sun reported an increase in occupancy in a trading statement. Does this mean tourism is recovering to pre-pandemic levels?
Yes, I mean, it does look like they are getting close to the pre-pandemic level at the moment. We obviously had the tourism sector most badly affected by COVID and the subsequent lockdowns, etc. That being said, the underlying economy, we've seen South Africans, especially over the last little while, showing some really, negative consumption habits. I mean, retail sales has been under pressure. So, if you look at this domestic, tourist demand, I think it's probably going to be weak. That being said, I mean, the weaker rand should help international demand.
And then cement maker PPC reported sales growth in Zimbabwe, but a decline in South Africa in an operating update for the 5 months to end August. What does this say about construction activity in South Africa?
Yeah, look, I mean, the domestic volumes were down, but they managed to push through like a 10% price hike. So that obviously is a positive for that company. Look, in the construction sector in South Africa has been under pressure. We've seen even other indicators across the country in terms of, for instance, housing confidence. We've seen, numbers from, for instance, some of the construction retailers, like the Willis Warehouse, etc., indicating that some of the after COVID, home renovation kind of boom has kind of gone away, and to some extent being replaced by things like boreholes and solar power, which obviously doesn't help PPC. That being said, the price increase, like I said, is positive for them. And even the volumes, like I said, are under a bit of pressure at the moment.
Just one thing on the indexes as well. With the financial index, I saw a quite big jump there of over 2% as well, with APSA also coming up very high on the biggest shares for the day. What boosted this growth in the financial indicators?
Like I said, I mean, we saw the good numbers coming through with regards to inflation, which generally tends to be positive for the financial sector. It tends to be positive for confidence, etc. So I do think that's possibly helping us. I looked at international markets. We had a big improvement around 1 o'clock. We have not seen something similar in other parts of the world.
And then just the last one, Viv. We were talking now about the inflation. Do you think that slight increase, that 0.1, could spook the Reserve Bank ahead of tomorrow's meeting? We know that they have a long-term outlook, so they don't just look on the data of the day. They do tend to look a few months ahead. What do you think could happen tomorrow?
I think expectations are for no change. There is a possibility of a 0.25 hike, but I think it's more likely not that there's going to be no change. Obviously, the one thing that could be fiddling with that would be a surprise from the Fed, which I don't think is going to happen. A 0.1% differential is not going to be huge. The one thing I do fear is that, one thing that wasn't a big problem in this inflation number, but will be in the next couple of numbers, is the fuel price increases. We've seen fuel prices up by over R1 in this month, and it's probably going to be the same again next month. And that's going to feed through to inflation quite badly, I think.
Yeah. And then, Viv, just one more thing with investors now. We were talking earlier this week about a competitive environment, and we do have to look to other central banks as well, with the ECB, the European Central Bank, hiking their rates last week, that we still have to stay competitive in a global market. What do you think investors will take if rates are left unchanged tomorrow?
I think that, look, I mean, the expectations are unchanged, but if there is going to be a surprise, it's going to be a rate hike. So if it comes unchanged, on average, it's going to be slightly, lower than market expected. That would be the way the market generally looks at these things. If there's a 5% chance of a hike and 95% chance of no hike, and it has no hike come through, then there's technically a little lower than expected, interest rate being pushed through. So the market may just get the run down a little bit. That being said, I mean, if you look at the ECB, they've generally been behind, in terms of the trends with regards to raising rates. And this is something that they've done again in 2008, 2009 in the financial crisis, where they were slower than everybody else to cut rates. So they have never been a leader. We tend to follow what the Fed does more than what the ECB does.
Thank you so much for your time, Viv. That was Viv Govender from Rand Swiss.